Hi everyone, my name is Jason Fila. I am a CPA and have been for several years now. And I work with a lot of doTerra clients, a few dozen clients here. And I have put together something that I call my PnL Tracker. Stands for Profit and Loss Tracker, because I've noticed for a lot of doTerra business owners, the bookkeeping side of things becomes somewhat of a block. And my wife and I also have a doTerra business on the side. She and I both work full time, and we've got our side business as well. So, taking the lessons I've learned from my own doTerra business, plus from my other doTerra clients, and put together something that I provided to them, and I'm providing to you as well, that I think should be helpful to you. And this is, this is not something people have to use by any means. If you have something that works for you, then wonderful. But this is something that has been helpful for a lot of my clients here, my doTerra clients. So just so you know, as I get started here, because my overall strategy with how I work for my clients kind of seeps into the products and the tools that I create for people. And so, here are my goals I have when I'm working with my clients. And the first is save people as much money as legally possible. And, on taxes, if you're not saving money actively, then you're reactively probably losing money, honestly. When you own a business, you either need to be a proactive planner or you will be losing money. That's just about a guarantee. My other apart from doing that proactive tax planning to save you money, my other goal is to keep people out of trouble with the IRS and other taxing jurisdictions. I always want to, and my third goal is I want to keep a bigger picture in mind. And so often this is, in terms of retirement planning. And it's one thing to become a successful business owner. And that's a hard enough thing to do on its own. It's a tremendous achievement. But if you can't make that jump from successful business owner to successful investor, then I hope you absolutely love what you do, because you might be doing it for the rest of your life. And that's not what, for most people, they want to have an end time where they can have an end target for retirement. And so, one gal here, I remember I helped her set up this really wonderful retirement plan in her business. And she was a successful business owner, and she still is. And we set this retirement plan up for her, and she was putting aside something like $150,000 a year, and it saved her $40,000 to $60,000 in tax. So, as a business owner, there are some really robust, powerful retirement plan or qualified retirement plans that you can put into place in your business that can save you a big chunk of change. And there's some overall strategies like Roth conversions that you can use along with that to lower the overall tax burden that you're paying in the long run. My fourth goal is to keep things as simple as possible, given these other things that I'm trying to balance. And then the last thing is I try to provide tools such as this one to make my clients' lives easier and, give them more peace of mind when it comes to their business. And so, some of the other things that I'm working on right now, a couple other videos. One's called Am I Losing Thousands on Taxes? 5 Strategies to Stop the Hemorrhaging. And then another one is S-Corp versus sole proprietorship. What is the right entity for me after tax reform? So with these, these have not been produced yet, but you're welcome to reach out to me and see if I've got those ready. And I can shoot those your way if they're ready. So, okay, let me go ahead and share my screen here, and I will show you the product. Okay, so everything in this profit and loss is PnL Tracker is color coded. So I've got my contact information because honestly, I'm going to give you an overview, and really, you should probably have some questions on this as you go through it that I'm probably not going to answer, because the way people do things is different and distinct. And there's not any one correct way, in terms of how you should do your bookkeeping here. people use different strategies, and they, there's more than one road that leads to Rome here, and there's various ways to skin a cat. So I've seen kind of the gamut with my different clients in terms of the way they're tracking things. And as long as I get to the right answer, then I am happy with that. So knowing these different ways that people are, running expenses through their business and whatever, I have tried to build that into the workbook to make it so it can accommodate these various approaches. So, you can reach out to me and ask me any specific questions that you will have on this workbook as you go through it, and I'd be happy to. So just keep a notepad and ask your questions that you might have for yourself, and I'd be happy to. So, okay, so the first tab, that's my contact information, the yellow tab, and then the purple tab is the substantiation required. And really, the IRS, this is what I'm trying to show here, is these are the things that the IRS wants you to prove if you ever get audited. And so these are the things that you're going to be wanting to, keep track of, things to prove these elements. So usually it's essentially comes down to you're trying to prove what you purchased and prove that you actually purchased, that you actually paid for it. So it's easy to get an invoice and you could just not pay for it, right? So, or it's easy to pay for something on your business bank account card, but it's not really a business expense, right? It could be a personal expense. So what the IRS wants to see that what you paid for, which is usually in the form of an invoice or a receipt, and they want to see proof that you actually paid for it. And that comes in the form of, a transaction on your business bank account. It's going to be a debit from your bank account. So, and it can get a little bit more specific here with different types of expenses, out-of-town travel, meals, gifts, etc. I'm not, this is a reference for you. I'm not going to, jump all into that level of detail quite yet here. But I will also mention that, vehicle expense is a very common deduction for business owners. Nevertheless, Congress and the IRS feel there's been some abuse here. And so what do? They put in a bunch of rules that make it, more onerous for business owners. So with this, the vehicle expense, you can choose one of two methods. One is the mileage method, and the other is the actual method. And these are the only two that you can use. And so I've seen people, do other things, but it's not really correct. And you might as well do it correctly so that, if you're ever under audit, you actually get to keep your business expense. So the mileage method is really as simple as it sounds. You keep a mileage log, and often people use something like Mile IQ, and you swipe, one way if it's business expense and the other way if it's a personal expense. So, but you do need to keep other, corroborating evidence that you have that mileage log is correct. So the IRS, if they audit you on this, they're going to say, okay, well, show me your, the invoice for when you got your last oil change, right? Because they're going to look at here's the mileage log on the invoice. Here's what your mileage log says as of that date. And if they don't, if they're not matching up, then they're going to throw out all your mileage expense. So you do need to keep track of other things just other than the mileage log. Okay, so the other method is the actual method. And so the actual method here, you're going to deduct the cost of fuel, insurance, repairs, and maintenance. And you're also going to deduct the cost of the vehicle, and we take that as an expense over 5 years, and we call it depreciation. Now, one thing with the actual expenses, let's say it's 80% business use and 20% personal use for the vehicle. Well, of course, we're only going to deduct 80% of all these costs then, of course. One thing to know is that if you're using the actual method and you're leasing a vehicle, then instead of taking the cost of the vehicle, you would actually write off the entire payment for the vehicle times whatever business use percentage. So if it's a $500 per month and it's 80% business use, then we're going to do $400. And and a couple other things. So if you own the vehicle but you have a loan on it, then regardless of which method you use, you could use the mileage method or the actual method, and you're still going to write off the interest expense on that loan payment times the business use percentage. If you own the vehicle and you're making those payments on a loan, you can never write off the principal portion of those payments. And I've seen that people get tripped up on that quite a bit. And that's something the IRS catches people on. Tolls, parking, things of that nature, you can write off regardless of which method you use. That's separate from this, vehicle expense from their perspective. So, if you are using the actual method, then you're going to run through your account all these different, bills, and that's the way you do that. Once you choose a method, you've got to stick with it. So you choose mileage, and you've got to use mileage for that same vehicle as long as you're using it in the business or as long as you own it. Now, let's say you've got 3 different vehicles. They're all used in the business to one degree or another. You can use mileage for one and actual for another. And, usually I tell people the first year, it doesn't hurt to keep track of both, and then we can use the higher of the two. Some people don't want to go through all the rigmarole of tracking everything, and so they find one method much preferable to the other. For some people, it's easier for them to keep track of the mileage method. For others, it's the actual method. And I'm not going to dictate to people which method they have to use. If you're not going to track accurately using one method, and you will with the other method, then it probably makes sense to use the one that you're going to actually track. So you've got your substantiation you need if you ever go. Okay, so the next tab here is how to use the workbook. And one thing I will say is I'm constantly updating, my tools for my clients to make them better. And so, I may have an updated profit and loss tracker. So I'm happy to send you the updated one. But this one, basically puts in text format, essentially what I'm talking about, very, very summarized. Okay, so these 2 blue tabs are really the whole point of this workbook. It's trying to give you a profit and a loss statement, PnL, and it gives it to you in 3 levels of detail. So here's the highest level, no detail really at all. Here's total income, here's my total expenses, and not excluding the home office deduction, and then here's my net income before my home office deduction. So I made $20,000 in the year, got $10,000 in expenses, and my net income is $10,000 as well. Okay, so that's the highest level detail. The next level detail here that's the least amount of detail. The medium level of detail we have here is, okay, we've got our income side of things here. So account number 100 is total income. Account 101 is unilevel income. So it's the account number and then the account description, okay? And I will show you how to get you don't input information on these blue tabs. I will show you where to input the information. So you shouldn't be typing anything on these 2 blue tabs. And I'll show you where to put that so everything flows right into here. This is what all of your work on the other tabs will flow into right here. And now I will get into why I have it broken out like this. I don't for federal income tax purposes, really all I need is the total income. But for management purposes, you may find it useful and beneficial to break it out. Unilevel, fast star, bonus of 3. And then here I've got a bunch of blank ones. You can add a whole bunch of new categories. And this even goes down below. I've hidden these columns because I don't want it to be so much blank space there. So unhide those if you want a whole bunch of extra. Most people are going to be happy to I'm going to just put it all right here and leave it at that. Just use it for income tax purposes. A lot of other people are going to say, I want to be able to take a closer look and see what kind of income I'm making, how it's going to be, throughout the year. Okay, so going down here, one thing I'll note here is contributions. So essentially, all the information that's inputted into here, 98% of it should come from your business bank account. or your business credit card. And so you might put some money into your business, and it's already been taxed. This is your personal money, and let's say you've got to put some money in your business bank account. Well, that's an owner's contribution. So it's not taxed. It's not subject to income tax, but we're still going to account for it and show it here, and then we back it out. So it's not going to be up in this number here. But we put it in here just so we can see what the contributions were throughout the year. It could be important depending on the type of entity you have. And also because if you're ever audited, the IRS is going to look at every single transaction, and they want to see every single transaction has been categorized. Otherwise, they're going to look at this deposit in your bank account, and they're going to say, prove to me that this is not income. And if you haven't categorized it, it's going to be more difficult to do that. So, okay, now distributions down here at the expenses is basically the opposite of contributions. So distributions is when you take money out of your business account for personal use. So the IRS doesn't want you doing a whole bunch of personal expenses in your business account. So they don't want you buying groceries or your Starbucks, or they don't want all of that stuff going in there. They don't want kids' birthday presents or Christmas presents. They want you to have only business income and business expenses going through this, and then contributions and distributions. So distributions is basically, let's say I want money to live off of coming from my business, right? So I would transfer lump sums out of your business bank account to your personal account, and then make all of your personal expenditures from your personal account. And that's what these distributions are. So instead of going to Costco and the grocery stores and Whole Foods or whatever, here, making a whole bunch of purchases to the business account, you take out the money and put it in your personal account, and we call that distributions. Okay, and this is a lot of the stuff that relates especially to doTerra. These are some more generic types of expenses, and we're going to get into all of this as and I'll show you how to add new expense categories and new income categories as well. Okay, so the next level of detail is this PnL by month tab, and we've got the total income, and now look at that, January, February, March, April. So we can see it goes all the way across here. It's total here is going to add up and be the exact same as here. So this is I don't need this tab. This is for management purposes. This is so that you can see on a month by month basis how well or how things are going in your business. So when I get this back from my clients, I know this is what I'm looking at, and then this is where I make my adjustments. So I do make adjustments. I'm looking at this and I'm saying, where are the risks? What deductions are being left out? What changes need to be made from what you gave me to what the final tax return is going to say, and that's where I'm going to make these adjustments myself. You don't need to touch these, this column here. And you don't even need to type anything in these. Okay, so that's what we want. How do we get that information in there? Okay, so let's just say, I'm going to show you which tabs to use here. So you use all the green tabs here are your input tabs: income and contributions, expenses and distributions. These are the two main input tabs where you're going to do most of your inputting. And then we've got this other information needed tab. This is what I have my clients fill out and send to me, that would basically cut down dramatically on the number of emails or conversations asking the same. So we're inputting this here. You only need to fill out the first 3 columns. That's it. And so let's see here. Now we look here. I just inputted those 3. January, February, March income. My highest level, $1,600. I haven't inputted any expenses yet. So $600, I'm putting it all just in total income. See here, okay, January made 400, February made 500, March I made 700. Okay. That simple. So, what else would I say about this? Okay, well, what I do to make this even easier is I go into my bank account and I export to Excel all my account activity for the year. and I take all of my all the credits, all the income, copy and paste it right here. And then I just go through and categorize. I'm like, okay, what do I want? Maybe I just want to call it all income, you know, except for anything I put in there. Make sure you put that as contribution, because this is not taxable. Total income is taxable. And then I just go say, and I put the month. Now, if you want to put all the account description, sometimes they've got that information on your account detail. You can just copy and paste that in here. You can copy and paste the date received, or you could, you could leave these blank. If you want, you can type in your own description. Maybe there's something, hey, this came from PayPal, or hey, this came from, some other location. That's fine. Just put it right in here. And that works just fine. Okay. So the next tab here is expenses and distributions, input tab. So this is very similar. Okay, so I have the amounts here, and I have a drop down where I'm going to choose this. And literally, it could be this simple. This is as simple as it gets. That's all you have to input for this workbook to function. So now you have your profit and loss. 1,600 total income, 650 expenses, 950 net income. Okay, 1,600 total income, 650 my product purchased from doTerra. And here, again, we've got 1,600 total income, 650 total, January 200 expense, February 150, 300 for March. Now I'm going to get into, I'm going to talk about how we're using this and how we're going to be, this is kind of where, the rubber meets the road in terms of doTerra and the different approaches people take for how they're going to take their expenses. But again, before we get into that, just at a high level, again, you can copy and paste that account detail right in here from your bank account. Export that to Excel, copy and paste all of those debits, all of those expenses right in here, and then all you have to do is categorize it and put the month, and then everything else flows. Now, again, if you wanted to add that detail, you can add a description here. You can put how you paid for it. I mean, you should have one business bank account, debit card, and or one business credit card, and that's how you're going to put it. That would be the simplest. But some people, especially as you get higher up, you might have several business bank accounts. You might have several business credit cards. Sometimes you might pay for something on accident from a personal card, or they didn't accept the business card and you had to use a personal card. So this is where you can say this is where the source documentation is from where I'm showing this expense coming from. And then obviously you're going to want to save that. So save a copy of your business bank account, your business bank statements. Save a copy of your, if you paid for it from a personal account, save that bank statement for that month. And this is if you want to, for a lot of people, they're not going to use this, and that's totally fine. But for a lot of people who really, really want it to make sure all their I's are dotted and their T's are crossed, you print your bank statement out, and then you're going to align, or whatever statement you're getting this from, you're going to say, okay, $200. This is for my, this is V1 on my bank statement. You're put right on the bank statement V1, and here this is also V1. So you're matching up all of your expenses basically, and so that way it's you've accounted for everything. Every single thing is marked with a V number on your bank statement, so you've accounted for everything, and you know exactly what it corresponds with here. So it's easy to find where you've inputted that information. It makes it very clean. If you ever get audited, you send this to the IRS, boom, it should be very easy for you to pass that audit, in terms of showing your expenses. Now you could, you can take, obviously you can put your receipt and the invoice number, you put who the vendor was and the date. Now, do you have to put the vendor? The only time you have to put the vendor is if you're paying any non-corporate entity, okay, more than $600 a year, then you do need to keep track of this information because we have to issue them a 1099. I would say for a lot of people, this is not common. So This is for paying, general contract, non-employee people, more than $600 a year. Okay. All right. So next is this other information needed tab. So this stuff here is, if you're interested in doing proactive tax planning, this is where basically I'm assessing where you're coming from in terms of your interest on that. So for all my clients, I tend to be a person where I love to do proactive tax planning. For a lot of my business clients, I sit down with them in the November, December timeframe. We do an estimated tax projection. So essentially, they have an estimated amount that they think that they're going to make for the year, and they think that we get to a point where we think we know what their net income is going to be for the year. And our goal is to be within 5 or 10% accuracy. And so part of the benefit of that is, one, we make sure you've paid in enough taxes, and two, the year's not over. So your tax planning opportunities are still around. And so it gives us an opportunity to sit down and talk about here we're saying you're going to owe 10 grand in taxes. Gosh, how can I reduce that? So that's when we start having those conversations. I don't recommend the tax projection for all people, but I think there gets to be a point where you need to be taking that pretty seriously, because income taxes can quickly become one of your biggest expenses in your business. And for many business owners, it is their biggest expense. So it's something that it definitely makes sense to plan around and be proactive about, rather than being a reactive taxpayer, being a proactive tax planner. And so my other tutorial that I'm coming out with will kind of speak to that. Okay, so you can answer these questions here and send it back to me, and that gives me a great idea of some potential tax planning strategies. This isn't going to answer all of my planning ideas here, but it gives me a good idea of what you've got going on. But in terms of the P&L to function, you don't need to send this. This profit and loss will work without this. Okay, so now we need to say, okay, for business owners, you use your home internet, you use your cell phone for the business. What's a correct percentage to use? Okay, well, I would say there's no correct, perfect strategy for telling me or proving to the IRS how much is for business versus personal. If you had a separate office and it was only, you had the internet there just for the business, then 100%. Most people, this is, DoTerra, this is going to be anywhere from 5 to 30%, use for, of the internet for the business. Some it'll be more, some it'll be less. So for cell phone, it's usually higher. It's, this is 5 to 30%, I'd say on average. Cell phone is somewhere between 50 and 90%, 75%, somewhere in there. And we'll talk about later on exactly how to get the cell phone expense into this workbook. But this is where you've got to tell me, okay, you're going to input the total amount, but later on, but you've got to tell me here what portion of that is business portion. Okay, so we got to break. Basically, my goal is, if you're ever audited, I want to show the IRS that we've been reasonable. So that they just, when we've been reasonable, they tend to just pack up and leave us alone and leave us as happy campers. So I've never had the IRS challenge me when we're using reasonable percentages here. Okay, so now here is let me show you. Let me take a break from this for just a minute. Well, okay, let me just show you. There are two methods here. This is where if you have that drop-down list here, you're choosing between all of these, how you're going to categorize these different transactions, income and expense tabs, these green tabs here. If you go to the last two tabs, the income categories and expense categories, this is where you can change that account description. So here I've got, you can see you can add a new one, new expense category. Okay, don't change the account numbers. There's no need to do that. Just change it here. Over here, for what's in here, I have put in the description, okay? This is to give you more understanding of what I'm talking about when I created these accounts. So, okay, distributions, I already told you about that, and this is where it describes what I've told you to kind of be a reminder. So when we're doing these doTerra purchases, right, from doTerra, this is where there gets to be a lot of confusion and a lot of questions, and there are various methods that are all okay to use, but this is where we need to chat about them. So some people will use, they'll have 2 credit cards, okay, and when they're doing their monthly orders, they will say, okay, I'm going to put, my personal expenses, personal purchases on one credit card and my business purchases on a whole separate credit card. If you do that, then you're going to put it right here, and you can categorize everything as just total product purchases, okay? And that's just fine, because everything there is a business expense, and I find that to be an acceptable method. So this is method 1, is to just, if you're using a separate credit card. Now, let's say you're using the same credit card. Let's say you're using one credit card to do your personal and your business purchases, okay? Just because it's impracticable for you to try to break it out on 2 credit cards, which is okay. That's how it can go sometimes. So if that's the case, then you can still use this first method. You can still put every single purchase from doTerra under this one thing, but then you're going to come back to this other information needed tab, and then you're going to break out and just tell me what percentage of that is for of your total doTerra purchases is for each one of these categories. Okay, so we've got our promotions. Okay, we got BOGO offers to team members. Right, this is coming from doTerra product purchases. Samples. How much are you? What percentage of all the purchases you've made are for samples? What percentage? Okay, we got. Okay, gifts and awards. Okay, well, that's going to be, it's at 30%. Product testing. Product testing is, so gifts and awards, first of all, some with rank advances, something like that, Christmas packages, whatever. That's where you put that. Birthday packages, if you're doing that, depending on, what you're doing there, you can send those things out. Now, product testing here is going to be, let's say you're trying out a new doTerra product, and it's not something you would normally buy, but you're doing it because you're trying out the products to see what you like, and so that you can recommend it to someone else, right, on your downline. Well, if you're trying it out for the first time, and that's the reason, then that's a business expense. That's product testing. You're not doing it because you would normally do it. You're doing it for the business. Now, let's say you try the product and you just absolutely love it, and you start buying it all the time again. Well, now then that switches from product testing to a personal purchase. Okay. So here we come with, a lot of people have this question. Okay, I have this monthly $100 PV. Can I expense that? And I understand the argument. So some people say, okay, well, this is so that I can earn my money. If I don't do this, then I don't get my money, right? So it's a business expense because of that. And I understand that approach, and it is more aggressive, to be honest with you. It's more aggressive, but given the values we're looking at here, I still don't think it's completely unreasonable to take that position. So, some people say, they'll just break it out. They'll say, well, I know out of this amount that 50% is personal, 50% is business. Whatever percentage you want to do here, is going to be, I'm comfortable with. Okay, so, obviously, okay, so let's see. So again, the same question with excess orders to obtain power of 3. Excess order, we got that twice. So, okay. And then, so we got excess orders, and then we got personal expenses. Okay. So these personal expenses, these are not going to be a business deduction. So we've got to be reasonable. We've got to back out some amount for personal expenses, and that's just how it's going to go. And maybe maybe I haven't gotten to everything here, that explains your business. So maybe you need to say, well, I've got other business expenses in here. Just tell me what it is. I mean, just give me a brief description of what you're talking about so that I can have a better understanding. So, this is a simplified method. This is where you're tracking all of your business expenses from all expenses from doTerra are just going into one bucket, and then we're breaking it out. And part of the reason we're breaking it out, one, is because we don't want to take personal expenses in there. We're trying to show the IRS we're being reasonable here. And another reason we're breaking this out is because when we have this income statement, going back to the summary PnL, I don't want to show the IRS one huge category here, $10,000 in that, and that's my main expense, and my income for the year is $12,000. That just draws red flags. We've got to break it out, right? And really, your doTerra product purchases, when you're purchasing those, they are different things. Some is for sampling, some is for promotions, some is for business gifts. I mean, they're different categories, so we're going to break them out as appropriate. Some are for supplies for, you're doing make and takes or whatever. And so they are going to be, we're going to break that out, and it reduces our, risk with the IRS. And so, okay. So this is the first method. This is probably the simplest method. And these, you're going to do reasonable estimates. That's what it's going to come down to. Could you find a method that would give you that? Yes, there are methods you could try. Maybe you keep track of everything in good detail for a month or two. Here's how much of all these product purchases are going to X, Y, this or that, and use those percentages. As long as they stay consistent throughout the year. Problem is they usually don't. So at the end of the day, from my experience, as long as you're breaking out a reasonable portion of your business expenses as personal, I think we should be copacetic here. A lot of people, so this is the least audit defensible method, because you're not going to have great support to show, okay, this is why I'm breaking out 25%. It's just what I think, right? So some other people are going to use a different method where they're actually going back here and they're instead of putting everything, all their product purchases to just one category, they are instead getting very detailed, and they're saying, okay, I purchased this order of doTerra products, and this is how much it's going to be used for, promotions or samples or whatever. So, they're not using a different credit card. They're using one credit card for business and personal, but they're just going in and they're breaking out and they're saying, okay, here's how much is for, they're actually specifically enumerating this bottle here is going for promotions, and here's how much it costs. So I'm going to go in here and just input that right here, and we're going to call it promotions. $20 for promotions. But as you can see, that can get onerous very quickly. So a lot of people are not going to use that method because it's just. And so I think this other method here, the first method, is probably the one that most people will use. It's simpler. I still think it's defensible. But the very best method would be, if you want to be super detailed, would be method 2, where you're actually breaking out those actual expenses. Okay, so that's what this is for. Okay, so information needed for home office. So for the home office, you can use one of two methods. One method is the safe harbor. And the safe harbor method is you get $5 a square foot up to 300 square feet, and that's $1,500. Method is the actual method, and then you're going to give me the rent paid, if you're renting, utilities paid, or I can get, I get the mortgage interest and I get the property taxes if you. And then we might depreciate it here, and then repairs that are made specifically to the home office, and then the cost of insurance for the house. And these are, you just input the numbers here. Okay. It's okay to use reasonable estimates for the utilities. I'm okay with that. Some people are like, oh my gosh, this looks like, unsavory experience to have to go through all of this. So I'm just going to say, here's the square footage for my home office. Here's the total home square footage. You need this no matter which, regardless of which method you use. But if you want to do the safe harbor, then that's all the information I need. You measure the home office square footage, you give me the total home square footage, and that's it. If you want to do the actual method, I need all this information. Okay, so let's see here. There's something else I wanted to say about the home office, and that is, oh yeah, just what is a home office? A home office, it's got to be used regularly and exclusively for business. So if it doesn't meet that criteria, then it's not going to fly in the IRS's eyes. So if you've got a bedroom and you also have a desk in there, then someone's sleeping in there during night, they're going to say that's not a home office because it's not used exclusively for business. So you're going to want a separate section of your house that's used just for business. That's fine. If you're using a place to create inventory, to hold inventory, then that would be a home office as well. So you can include that. Okay, now back to those vehicle expenses. How are we going to do this? Again, I've told you there's an actual method and the mileage method. The mileage method, it's about 55 cents usually per year per mile, or each year it's 55 cents per mile. But here's where you input that vehicle information. So this is just helpful for me, so I don't have to be asking again 10 emails back and forth. You just say, okay, these are my business vehicles. I got a 2010, Honda Civic. When you start using it in your business, okay, how we get to take that depreciation if you use the actual method. Okay, so what's the value I use? Well, you've got to use the lower of what you purchased the vehicle for, or what the vehicle was worth when you started using it in the business. So if you purchased it for $25,000, and when you started using it in the business, it was only worth $10,000, then you'd use $10,000 here. So this is where you type it in. What date purchased? Do you know which method you want to use already? If so, put it in here and just tell me. Okay, I'm using the mileage method. That's all you need to know, Jason. Okay. If you're using the mileage method, then there's a couple different ways that you can do this. You can keep that MileIQ app, which is the best way to do it because you've got that nice mileage log. If you have a vehicle that's only for business, you don't use it for any other thing, then some people just, to give me a shortcut, they do a beginning odometer and their ending odometer, and I'm fine with that. The best method is to use the mileage log if you can. Okay, and then the business use percentage. Okay, so this is, again, if you're using the actual method, I need to know, okay, is it 50% business use? Is it 20 or 5? Is it 75? Is it 100? You just type it in and you tell me what percent business use that vehicle is. Now, when you input the information in here, this information, it will flow over here. And you can see, vehicle expense, insurance for the 2015 Honda Accord, fuel for the Honda Accord, repairs for the Honda Accord. So if you're using the actual expense, again, look at this description. This is what I'm telling you, I'm telling you what I'm talking about here. If you use the actual expense, then you're going to be tracking these things. And so you're going to run it through your business bank account. I've got $50 of fuel here, down here, and vehicle expense, fuel for 2015 Honda Accord. And that was in March. There you go. So that takes us, that handles the vehicle expenses. Okay. Now, I mentioned here that if you are paying someone who is a non-corporate entity, so a non-corporate entity, if you're paying them, and they're not an employee, then you need to issue them a W-9, or they need to give you a W-9 filled out. So before you pay them, if you're going to pay them at least $600, this is for if you pay someone $600 a year or more, then you need to have them send you a W-9 filled out that gives you the information you need from them, which is their name, their address, and their EIN or social security number. And then, just a brief description here is where you type it up. And then you need to make sure whatever this vendor name is here you're using, you're inputting that here so that we can go back and we can grab these amounts, add them up, and issue them at 1099 at the end of the year. So this is to help you with your tracking to make it easy for at the end of the year. We can help you with the 1099s, or you can do your own 1099s. For a lot of people in doTerra, it's not an issue. Okay. So again, here I'm going to these last two tabs just to do kind of a more thorough explanation of these two tabs. Okay, so again, you've got the account number, account name, which is account, and it tells you what the account is, and then you've got this description. This description here is me trying to give you information about how I'm expecting you to kind of use these accounts. You don't have to use these here. You're using these accounts 101 through 105 only if you want that level of detail for personal management purposes. I don't need that. We may need that if you get into doing a lot of retail sales. I would need that. I would need that. And we can talk about that and how to set this up. That would be a separate conversation. This tutorial is not meant to get into all those intricacies of how you're going to track things for sales tax purposes, etc. But if you're doing substantial amounts of that, then we need to chat. So reach out to me. Okay, contributions. I've explained that. If you've got some interest income in a bank account or whatever, we get that. So to be truthful, most people are just going to do this one. Total income. This is what I made each month. So all your deposits on that month should add up to your total income. Okay, so that you should be using your bank statement. And then if you've got business income coming in from other sources, PayPal, someone's paying you PayPal, so it's not hitting the bank statement, then you're going to want to make sure you include that into the total income as well. Okay, so these expense categories, let's go through this. So I've explained what the distributions are. That's if you've got money the business has made and you want to take it out for personal use, you take it out through distributions. You're not going to pay for any purchases, but you're going to transfer it from your business account to your personal account. Okay, so I explained method one. So most people will use method one. We'll just track all of the doTerra product purchases right here. And then they'll go back here, and then they're going to break it out here of what is each, the percent of which all falls into each category. And the most important is that we get a good, reasonable breakout of personal expenses there. Okay, so let's see. So the account 502 here. So what this is let's say you're buying rollers, or let's say you're buying something from Aroma Tools or something else at little shops at convention, books or whatever. These are some non-oil supplies. You're not purchasing from doTerra itself. You're purchasing these from some other group. These are just going to be 100% deductible. So that's what this account is for. Okay, so let's say you're traveling to convention or traveling to meet your team somewhere. Well, that's where you're going to include it here. Okay, so if you're paying sometimes people will pay some of those travel expenses for their team members, because their team members can't afford to come out. Help pay some towards their airline ticket or whatever. All of that, just throw all that travel right in here. Shipping, travel expense, I will say it can deserve a fuller explanation. If you're doing international travel versus domestic travel, there are business rules for how you're going to deduct those. The IRS has, Congress has passed different laws for how you deduct those. So for domestic travel, if the primary purpose is business related, meaning that, how do you know if it's primary? More business days than personal days. And we can have a discussion of what's a business day versus what's a personal day. And then how do you prove that, right? So this can be a fuller discussion. But let's say you're going to Hawaii on a doTerra funded getaway, or all of any of your expenses for that time, because it's all, as long as you're not staying over extra days, but it's all, meeting with the different, higher ups in doTerra, then all of those deductions would be travel deductions. So domestic, again, what's a business day worker? So what's a personal day? If you're doing something related to the business, at least 4 hours for that day, and that's a business day. I would say that's a reasonable approach. If you're working on a Friday and you are also working on Monday, but you do personal days on Saturday and Sunday, you can count Saturday and Sunday as business days. The day that you fly in, that's a business day, right? So the goal is with the domestic travel to get above 50% being for business, and then you can say the primary purpose was business. You can deduct the full amount of your airline tickets. If it's less than 50% for business, then you get to deduct none of your travel expense there and back. On a nightly basis, any night that's a business night, you can deduct the cost of the hotel, you can deduct the cost of the meals. Meals should not go into travel expenses. Those should be separately stated. Those go down here. They're 50% deductible. You enter the full amount, and I will deduct the 50% on the tax return. Okay, so let's see here. International travel is, for domestic, it's all or nothing. If it's above 50% business use or business travel, then it's primary business purpose, or primary purpose is business. So you get to deduct all those travel costs there and back. For international, it's a pro rata. So let's say you go to you're traveling internationally for business for some reason, then 50%, and you say 75% is personal, 25% is business. 75% would be non-deductible of the airline ticket there and back, and 25% would be deductible as a business expense. Okay. Shipping, postage, here if you wanted to go to a bigger level of detail on the shipping expense, then you could go in here and this description column, you could write, here's, these are the people I was shipping to, this is what I shipped. Again, people using method 2 would probably use that method. People using method 1 probably will not. So it depends on how detail oriented you are and you want to be on that. I'm fine with you not entering any extra description. You've incurred the expense, I'm fine if you just take it. Explain method 2. This is if you're going in and you're specifically saying these are the oils I sent to so and so. This is how how much I spent to another person, and then you're adding up the cost of those oils, and this is where you would this is how you'd break those out. So use accounts 505 through 510 if you're using that second method. It's very, very detail oriented. It's a better audit defense if you use this method, but it is very onerous to do for most people. So most people probably will not use this. They'll use method 1, to be honest. So team events, if you're at convention, your team gets together for whatever purpose, don't include the cost of the meal here. Cost of the meal will go down here. That is only 50% deductible. Nevertheless, the rest of the team events would be deductible. Entertainment, though, I will say, is non-deductible. That is a new thing with the tax reform. That we do not get to deduct. Okay, so these first ones here are the main ones for the doTerra. Let's see, retirement plan. There are all kinds of retirement plans you can put into place for your business, and there's just so much planning to be done around that. And as I said before, this is how I've saved some clients $50,000, $60,000 a year in taxes. It can be very, very powerful. So you can do a solo 401k. That's a really powerful one, especially for doTerra people. You can use a Roth 401k. You don't get deductions now, but you get just a ton of money in there and making money for you tax-free, gross tax-free, and comes out tax-free. So this is a full discussion on it in and of itself for those people who are interested. Let's chat. Okay, so the monthly cell phone bill, when you buy your cell phone, okay, they won't even let you pay for it out of pocket now, right? They make you pay for it over time. So if monthly cell phone bill, let's say you're the only one involved in the business in your family, but you've got 4 people on the plan, and you've also got the cost of the phone that's being paid for. Really, we want just the data amount. How much are you paying for data for your portion? So if the monthly bill is $500, and you've got 4 other people on there, and then $25 is for your cell phone, then really we want $100 a month as what we're going to write off. And then we're going to say, okay, what's the business portion of that cell phone right here? Okay, so when you buy the cell phone, tell me what the full cost of it is. Use account 517. So you buy a cell phone, and if you purchased it outright, it would be $600. Tell me that, and we'll write off the $600 times the business use. Okay, if you're using children in the business, that's a tax planning strategy. This is where you tell me what that is. This is best used for sole proprietorships, not so good with S corps. Internet. Okay, let's see. Health insurance. If you are not covered by a spouse and you're not covered by an employer, and you're simply self-employed, then you get to deduct the cost of your health insurance. And so that's where you put this. Okay, let's see here. Computers, if you're using a computer, and let's say you just started using it, it's something you already own. It's similar to the vehicle. Give me the cost of the cost of what you paid for it or what it was worth when you started using it in the business. Same goes for office furniture. So we want to make sure we capture all of those things if they haven't already been captured. Okay, taxes. This would be for probably sales taxes. Okay, so often it's and usually these taxes are for a lot of DoTerra business people, they're not doing much retail, if any. So this is not going to be significant, if anything. Now this account 538, this is for estimated income taxes. We in this country are in a pay-as-you-go system, meaning that as you make money throughout the year, even though you don't know what your taxable income is going to be, you really don't until you do your tax return, right? Nevertheless, the IRS and Congress wants you to pay income taxes as you make that money. And so they have if you had a W-2 and you were an employee, then they withhold that evenly throughout the year as you make your money. As a self-employed person, the IRS wants you to make quarterly estimated income tax payments. And when you're having money taken out of your paycheck, keep in mind they're taking out the employee side of Social Security and Medicare taxes, what we call self-employment tax or payroll tax. So when you are doing your quarterly estimated tax payments, you've got to pay your income taxes and your payroll and your self-employment taxes if you're a self-employed individual. So and the self-employed taxes include the employee and the employer portion of Social Security and Medicare. So these can be quite hefty, and that's why I really like to do a lot of tax planning with my business clients, to do as much as we can to save you money. Okay. Wages, this is usually not something we see for our sole proprietors. Again, not usually something we see with sole proprietorships, but if you have an employee, then you would have this. If you're an S corp, then you would have these things. And if you haven't declared a salary by the end of the year, then that's part of what we talk about in November, December to make sure you declare your salary for the year. Okay, I think those are the main things. So I hope you've enjoyed this presentation. I've enjoyed chatting with a lot of my DoTerra business clients, and I look forward to chatting with you. Again, feel free to reach out if you have questions. If you want an initial consultation, I'd be happy to do that. I make my money by charging flat fees for preparing tax returns. That's what I do. And so, again, I think a little bit different than a lot of CPAs that people have, in that I have a big focus on tax planning, proactive tax planning, trying to save people money on taxes. And I have a big focus on, I've got a lot of DoTerra business clients. So I understand the business. I know, some of the questions other CPAs ask just aren't really relevant. And it shows that they don't really fully necessarily understand the type of business that's going on here. So anyhow, I hope you enjoy this, you find this PnL Tracker useful. I have other tools available as well as the need arises for my clients. So feel free to reach out if you have any questions. If you want to see one of my other tutorials, you can shoot me an email. If you want a consultation, if you've got questions on this you want to follow up on, if you want to get a quote for how much it would cost to prepare your tax return, any of those things, I'd be happy to chat with you about. Thank you so much.